Welcome back. You're watching Markets at Noon on ET Now. Nifty 24,100 is what it's managing to hold on to, 0.4% of uptick. But like I said, we're going to shift focus and talk about Man Industries. Now, recently we had a brokerage note that came in from MK as well. They initiated coverage, target price of 500 rupees per share. They're highlighting a lot of tailwinds that are coming in for Man Industries going forward, and especially in the sector, they expect the company to do well. But what is the opportunity that the company is seeing for themselves? Let's bring on board Mr. Ramesh Chandra Mansukhani, Chairman at Man Industries, joining in with us. Mr. Mansukhani, very good afternoon, and thank you so much for joining in with us on ET Now. And so, I want to start by talking about overall the trends, right? We're seeing a lot of bullish notes that are coming in from brokerages. They're highlighting a lot of tailwinds for the industry. What is the opportunity you are seeing for yourself as a company in terms from the expansion into the stainless steel side as well as the ERW segment that is there in Jammu? So what is the outlook there?
Good afternoon. The company is doing very well, apart from the most of the segment nowadays very bullish because of the oil and gas sector worldwide is doing very well in the hydrocarbon sector demand. The main existing plant in India is full of orders, and the most of the orders from export front. The current order position is roughly 2,100 2,200 crore pending, which will be completed in next 6 to 8 months. As well as ERW, the new plant also started, got all the accreditations, and we are getting some export orders also, and we got some orders also. As regard to Jammu is on track after initial teething problems, land, etc. now is being resolved, and now the work is going the full swing. As well as the company's dream to start the production in abroad, also on the right track actually. So with regard to 25, 26, 24, 25, we are expecting the growth around same 25-30% growth. As regard to 26, in the next 2 years, our growth will be roughly 100%, which we are anticipating, considering our capacity utilization as well as to the new value-added products and synergic business we are going to start.
Right. So yes, really a strong number coming in there. FY26, 100% growth is what one could expect. FY25 also a strong growth that you're expecting. Mr. Mansukhani, just in terms of further more details that I want, especially for these segments which we're talking about, stainless steel, ERW segment, line pipe segment, how is that revenue share going to be shaping up in FY25, FY26 from these segments? What is the contribution that one could be eyeing here that you would be seeing?
Regarding this, our own line of business last stabilized, we are seeing around 50% growth in next 2 years. And then 1,000 crore additional revenue will come from SS business. And ERW, etc., we are discussing between 600 to 1,000 crore in near future. So overall, that's why we are projecting 100% growth in 2 years.
Okay, so strong growth is what you're expecting, but can you just give us an idea of where your current order book is as of May 29th? We remember it was close to around 2,600 crore rupees. So how has that grown in the last 1 month?
Yeah, right now the order book after executing this quarter will be around 2,000 crore plus, 2,100 crore plus, which is mostly 80% is export, as well as we have the bid in the international market where our position is very strong, which we are going to realize very soon. And the total bid in the international market is more than 10,000 crore, where we get the reasonable chunk of the business for current year as well as for the next year.
So if you could give us any idea of for how much value of this bids are you been an L1 at this moment?
No, as I indicated, given the guidance, our growth will be in 2 years will be around 100% growth. So you can judge it. Right now we have done 3,200 crore, and the additional 3,000 crore we are aiming for next 2 years, considering as a company as a whole.
Can we comfortably say this, out of the 10,000 crore of bids that you have placed, at least 60% is something that the company can easily win?
No, it's a very difficult question actually. We cannot give any percentage why, but few of the projects we are a strong position which we get, as well as to the lot of other business also coming in the future which we bid and get it. Some business we are the small business we get the regularly. That's why we cannot give the percentage or anything. But our situation is strong. EBITDA also improving, and the total revenue also going to increase. So it will be the great benefits to our stakeholders in coming time.
And this 2,100 crore of orders that you currently have with you, what is the execution timeline for the same, and where would be the margins for these orders?
This order margin is reasonably well. Like, this is last year order. We are expecting 10% EBITDA, and the completion time you can say from June to December. Maximum order will be finished December. The new order also will come, and then we'll going to start this thing. So we are aiming 6 months to complete these orders, and then the new orders will also be going to complete next year.
Okay, and just a word in terms of the margins. You'd guided 12 to 13% in terms of EBITDA margin for FY26. On track for that, or could we expect a higher margin also going forward?
No, the some orders EBITDA will be around 14-15%. Some is 10%, depending on product, revenue from domestic market, revenue from export market, the lot of parameter. But the overall our situation as regard to the estimation for our conservative purpose, we always do between 10 to 12% as a conservative basis. Always do it.
Right, and Mr. Mansukhani, just one last word in terms of hydrogen transportation, or that foray also had come in recently from the company side. Specific opportunity that you're seeing, and given that, that's a bit on that high margin side in terms of the hydrogen side business, how will that also aid in terms of the move going forward?
Yeah, now we are a company compatible to produce the pipe for transportation of the hydrogen. We got the accreditations and our preparations, we are well prepared. It is a future energy. Instead of oil and gas also regular. Oil will be slowly reduced. Hydrogen and all the modern future energy business transportation. We have to keep ourselves well equipped and comfortable, and which we are ready for future business, the longevities of the business.
Thank you so much for joining in with us this afternoon, talking to us about the outlook of the company, the margins of the company, where they are headed. And surely 100% growth in terms of revenues is what the company is expecting in FY26. FY25 could be around 30% growth as well. And margins, obviously, the 12 to 13% is what they had guided. And on conservative basis, they say 10 to 12% is what we could expect. So yes, that's the word coming in from the management of Man Industries right now. As of now, stock managing to hold on to good gains of 6% as we are talking. But let's move on